So good morning, everybody. My name is Vince Jacobs at Solarisbank since very early days, which in the startup world means 5 years or more. So what have we been doing here at Solarisbank? So Solarisbank has been very heavily focused on, 1 second, the clicker seems to be turned off still. So at Solarisbank, what we have been doing is we got our own banking license 5 years ago. And we said to ourselves, we don't want to compete with your regular retail banks, or at least not directly. So we have said, why don't we just expose APIs? We take care of all the heavy banking topics, all the operations, all the regulation, all the KYC liabilities, and so on and so on. But on the other hand, we don't build front ends. We don't build customer experiences, because we believe that banking products, and some of you might not like to hear this, we believe banking products are rather boring, but they are very much needed in today's world. And we see them as an enabling product because you still need them to go through your daily life, right? So a good example here is always, people don't wake up in the morning to say, yes, today I'm going to get a loan. But people do wake up to say, yes, today I'm going to get a car. But you might still need a loan to get that car. And that is where we believe we find the sweet spots where banks of the future will be, at the intersection of providing infrastructure and expertise and letting the customers do the experience where they are naturally interacting. So on the Facebooks, on the e-commerce platforms, on taxi apps, and all those different platforms. So we have been doing that for quite some time now, and in a pure neutral environment, in a B2B2X environment. So we don't talk to the end customers directly. We always outsource that to our partners. And those partners can be licensed companies or they can be non-licensed companies, making it very interesting for those players to understand how they can find new products to interact with with their customers. So we have made some observations in the market, of course, over the last years, and we've seen this trend emerging more and more globally. So in 2010, you would see that there was only a few players that were non-banks that were interacting on the financial flows of people. So let's call them PayPal and friends. So there was not too many fintechs there yet. But now, 10 years later, 12 years later, we see that it's slowly but surely more and more chunks of the banking market is being taken away by fintechs, by payment providers, and by many others. So that's not just something that we've observed. This is actually a source from The Economist. And this is further evidenced by seeing also in the market that more and more, let's call them traditional players, are looking at integrating financial solutions. So various media outlets have reported that, for example, a Walmart, right, big supermarket, is stepping into the fintech space. We have looked at IKEA buying out one of their partner banks to really make sure they can have more control over how they can offer financial solutions to their customers. We see that as well in Lidl here in Germany, big supermarket, offering different payment solutions. Of course, you know all the examples of Apple and Uber and Samsung and so on, who are also really much looking into those solutions. So we said to ourselves, let's dig a bit deeper into this, and together with the Handelsblatt, which is the German version of the Wall Street Journal, look at what is moving those customers, and are those customers really interested in that, or are they just testing that out? So earlier this year, we did a study where we interviewed roughly 2,000 people in the German market to ask them about how they and if they would want to interact with financial products of non-traditional banking players, e-commerce players especially. So one of the first findings is that 61% of those people said, yes, in the future, I definitely see myself using a banking product or a lending product or a payments product from an e-commerce player or a retailer. So that was already very interesting. And so we said, let's dig a little bit deeper and understand what that exactly would mean for those people. So we asked the same question, would you use one or more of the products from the top 20 e-commerce players here in Germany? So the current account, 28% of the people said, yes, I would use a current account from Amazon, because they believe the daily interaction that they have with Amazon makes a lot more sense to also have cash parked there. The same for Lidl, where you have a lot of interactions, of course, as a supermarket, and the DM, which is one of the most common drugstores here in Germany. We asked the same question for the credit card, where you start slowly seeing a shift where people look at the high basket values of some of those players, because of course a credit card as a form of a loan, people would use that rather for installments. So the media market and IKEA, right, furniture, electronics, typically a bit more expensive baskets than what you would see on your daily interaction with Amazon. And when we look at lending or installment products, there all of a sudden it changes. People there see, I don't really care too much about the daily interaction that I have with these brands, but I care much more about the value and the basket size that I would get from the IKEA to the furniture store, where you easily, and I think all of us know that when you're at IKEA, you easily throw a couple other items in there because it's convenient. So this is for us a very good indicator that people are very much willing to look at other alternatives than just interacting with their branch of the bank. So why would those companies be interested in offering these solutions? It's for many different reasons, but the three most important reasons that we have found is, on the one hand, they would open up new revenue streams, right? Through interest rates, through card payments, through interchanges, and so on. They see much more customer retention because they grow their ecosystem. So there is more ways for the customers to interact with the products. There's a much more seamless experience than you otherwise would have. And of course, they can leverage much more customer data. Right, so if you would think about a very random example, Zalando, if they would issue a fashion credit card, so to say, with all kinds of cashbacks when you purchase fashion items, it's of course for them interesting to understand how customers interact with that card around their platform, but that information they would already have, of course, through their own systems. What is more interesting is to understand, what are my customers spending at my competitors? What are they spending at ASOS? What are they spending at H&M? And these kind of information you otherwise would never get. So you can really see what your share of the fashion basket would be. And on that, have certain personal marketing activities. So now that we have established that it's very interesting for those companies to look at these products and that customers are very willing to buy those products, the next question is, how do we make sure this happens? How can those companies get access to those products and through those systems? Well, the obvious answer and of one of the two options would be they can become a bank themselves. But becoming a bank yourself is very expensive, starting only with the 20 million that only gets you started, and then you would definitely need much more money after that to make sure that your system is fully up and running. The regulatory burden, a lot of overhead, a lot of additional processes that need to be built out. And maybe even the most important one is the time to market, because it takes at least 12 months before you have your license. Then you need to have the further system set up, all the different audits that are coming in. So before you can really seize that opportunity that you have seen in the market 2 years before, that window may have already closed in that time. So yes, of course, some people say, I still find it very interesting to get my own banking license because I want to have that control. I want to build that value for my shareholders. But there's many other companies that would say, I'd rather do that slightly different. And that's why the second option would be, of course, partner with Solarisbank. Why would you partner with Solarisbank? Because we have a full neutrality. So you customers are basically being parked at a regulatory parking lot in our core banking system. We won't upsell to the end customers. We just make sure that you can work on many different products at the same time, because we offer a range of different products. We have a very modern tech stack. And of course, over the last years, we have gotten investments from various different companies so that we have pushed in 350 million into building the system, which would be, of course, much more useful if you can simply duck into that instead of having to invest that yourself. So some of the products that the companies can use with us is, of course, anything around identification and KYC services. It is around digital banking, payments, cards, and on the other side of the balance sheet, lending, various lending products, but also a lot of crypto activity, so brokerage and custody of crypto solutions in the German market. We, of course, don't fully do that only ourselves. We have said, let's just take that partially from the market by simply relying on the others, because there's no need to reinvent the wheel yourself. And then we offer those products through our APIs to various banks, big tech players, corporates, startups. So there's many different types of interactions and different kind of requests that are coming in. Banks would rather say, I want to test a new product because I don't have the right resources, or I simply don't have the time to build it myself. We look at corporates where they say, we see a lack of loyalty from our customers, especially looking at utility companies, for example. How can we still get that daily interaction with our customers? We look, of course, at big tech, who says, we want to expand the ecosystem. We want to learn more about our customers. We want to extend that profile of that customer. And fintechs who would say, we want to get started, but we don't have all the resources, we don't have all the people, we don't have all the funds to really build out our own systems. So we'd rather dock onto an existing provider. And they then, of course, in turn, with their own front ends and their own systems, would interact with end customers, individuals, as well as with SMEs, which then all the way flow back into our core banking system, fully white labeled, of course. So that's one element why it's interesting. So you can grow with us over time. If you see, hey, now lending becomes interesting, or now cards become interesting, that you could very easily tap into our system to get access to these products as well. The second point is, of course, expanding across the European market. So a lot of these e-commerce players are operating globally, or at least regionally in Europe. So having a product that's only fitting for Germany doesn't often make a lot of sense. So being able to expand that to the other big economies, France, Italy, Spain, those are countries where we have branches in, so we can offer completely local products. But of course, there's various other countries that we have passported into, so copying our German setup. So that makes it for a very interesting conversation to understand how those companies can grow with us and really make sure that they can capture the broader value proposition for the customers in Europe. So we have seen now the theory around how it makes sense to look at this. So we have brought along a couple case studies to see how companies have worked with us on building those solutions. Vivid is one example. I'm not sure if some of you are familiar with that brand. They started with us in Germany as a spin-off of Tinkoff. So Tinkoff Bank being in Russia, one of the most popular digital banks that we know. They said, we have seen the successful formula in Russia. Why don't we take that to the German market and to the broader European market? So they are using basically all our products. And they said, let's really make sure that customers have a unique experience here. And then it comes down to competing with the Revoluts, competing with the N26s, which always boils down to making sure that there's enough marketing budget, because that's at the end of the day in the neobank space in B2C, what it boils down to, how much exposure can you get to your customers. So they have actually said, we will give cash back up to 20 euros per month per customer if they are using the cards in certain ways. So they have gamified these elements quite a bit. They have the ability to add family members. You can invest in various stock programs. They do P2P lending. So they really build out a massive proposition, initially in Germany, but very quickly thereafter scaled throughout the Italian, French, and Spanish market as well. So something that we are indeed very, very proud of. The second use case, which actually for us, they're using very similar products as what Vivid is using, but just for businesses. So from our side, other than the KYC, there's very few differences with how the companies have interacted and integrated with our solutions. So Penta has said, we want to support, on the one hand, entrepreneurs who want to set up startups and who want to set up SMEs, and existing SMEs. So they support companies, or they support the foundation of companies, as well as the complete money management of their SMEs. So this is anything from, of course, regular bank account and cards for payments, but also looking at accounting systems, looking at tax systems, and really linking all of those together so that you only have one point of interaction and you don't need to log in and out of all those different systems. Then another big project that we did is with Samsung. So Samsung said, Samsung Pay in Germany wasn't really finding its traction next to the Google Pay and next to Apple Pay. So they said, let's go for a slightly different approach. Let us, instead of allowing customers to interact and to upload their own cards, why don't we just limit that to issue Samsung cards together with a buy now, pay later solution in there. So you as an end customer with your phone can get a card, and up to 6 weeks in the history of your card transactions, you can select the different transactions and say, I want to convert this transaction into an installment of 3 months, 6 months, 9 months. So this interaction helped a lot to push also Samsung products, of course. Samsung products not always the cheapest ones. So therefore, they said, why don't we also give the customers the option to do this directly with Samsung, instead of having to go to the MediaMarkt or another electronic store and be in that corner, in that weird credit request space where people are always a little bit awkward around interacting with this. So why don't you quickly do this on your own phone, make sure you have the cash available, and then you go to the cashier. Then we also, as a last one, have Nuri. Nuri, previously called Bitwala, is a crypto neobank, effectively. So on the one hand, you have a crypto wallet, you have your fiat, your regular euro wallet, and those two interact with each other on the card. So if you have enough cash, it will take your euros, and otherwise it would liquidate some of your crypto assets. And that interaction happens fully within Solarisbank. So it is 24/7 that you can move funds around instead of having to wait, of course, for funds to arrive on a regular business day. So they have also seen a lot of success. The only reason why they're still in Germany only is, of course, because internationalizing on the crypto side is not as streamlined and harmonized across Europe yet. So people said, let us fixate more on the German market. And once the other markets have settled their own regulatory regimes there, which, for example, Spain has now done, we all will look at the other solution, because we don't want to act in a gray zone here, as the crypto already has enough strange connotations to it. So these are just a couple different examples of how you can interact with a company like Solarisbank as a banking as a service provider, and really make sure you can capture the value that your customers are looking for. And of course, it's a good reminder to understand that banks really have to start looking at providing clean and really cool solutions to their customers. Otherwise, they will go away to the e-commerce companies. They will go away to the new fintechs, to the retailers, because they are coming. That's all I had for you today. Any questions?
Thank you very much, Rins.
Very good.
Do we have any questions from the audience, please? I do have one, Rins. I think it's just really interesting to see how Solarisbank is really pushing the concept of embedded finance and modular approach, because those are two very big trends and topics to discuss in the journey towards digital banking or digital transformation. And so I'm just curious to hear your thoughts on, for example, how Wirecard, rest in peace, they used to have more or less the same kind of offering, but they still decided to have to keep a customer-facing channel with their solution Boon, which again now is dead. I'm just interested to hear from you. Is there an interest from Solarisbank to build some kind of solution that you would be selling directly to the retail customers? And the idea is obviously not to compete with your customers or your partners, but more to have a showcase of what could be done. I'm actually thinking, for example, about what Microsoft is doing with its Surface. It's building beautiful devices, sorry, just to show what's best in class, but obviously they still want to sell Windows to the partners, the manufacturers, if you follow the analogy.
Exactly. So
what do you think?
So we have always very strongly said we don't want to build any of our own front ends, right? Mostly for the reason that it would be perceived as competing with our partners, and there's a conflict of interest because we always will have more data than each of the individual partners will have. So even if you just use it for a demo case, people start to ask the questions, is it just a demo or is it just slowly massaging in that Solarisbank is going into the retail market? So we have clearly said we don't want to do this. We have for a long time asked ourselves the question, should we offer white label front-end solutions? But we decided not to do this because if you do this, you don't leave any room for your partners to become unique and to have a differentiating factor, right? Because all the buttons will be the same, basically, just a different color. So we decided to not do this, but we do have various hackathons in Solarisbank every now and then where people build various solutions themselves. Some of those we might show to clients when we are in sales pitches, but we decided to indeed not at all focus on this and purely focus on stabilizing the system and adding new features.
And you did mention also the data, which triggered another question. Because obviously you're more the infrastructure provider, so to say, which means that you do have access to a massive amount of data, even more than your customers themselves. Would you say that it's one of your USP to leverage this access to data in terms of risk management or fraud management, just as an example?
Yeah, of course, it's difficult to draw a simple line because let's say a second-hand car dealership that focuses on loans with us has a very different way of attracting customers, and they have very different types of customers than let's say a crypto investment company, right? So it's not easy to say one-to-one, this customer has done this, therefore that customer will do that. But we are indeed looking now that we have reached a certain size and a certain number of accounts and so on, we can now start to look at the other synergies that are coming in because, for example, you have onboarded yourself with Samsung, for example. So we, of course, have your KYC data. And now you say, oh, I also want to onboard myself with Nuri. So we already know you. So now we should be able to tell you, you don't need to be KYC'd anymore. Just click this button and we make sure that you get right away an account. So these kind of synergies that we can sell to our partners are now starting to come. And this is just one example, but there is indeed much more elements around fraud topics, around KYC, about credit scoring topics. So we do see that, and that's actually what's starting to happen now, and that soon we'll start to see in the market as well. Yeah, exactly.
Any questions from the audience?
I can hear you at least.
You can hear me? Okay, thank you. If I may, would you drill down a little bit and tell us what is inside of this banking as a service platform? I mean, for what kind of banking services the product is supposed to be? For universal banks, maybe for investment banking? May I find the products like trade finance or maybe syndicated loans? And so in general, for what kind of banking this platform is supposed to be?
So this is mostly focused around retail propositions, and now we're going into corporate propositions as well. So it is your accounts, cards, payments, loans, fronting of loans, right? Origination topics. We are now stepping into brokerage of securities as well. That is coming soon. So we are staying very much more on the B2C side and not into the complex investment banking and corporate banking.
Thank you. Thank you.
You're welcome.
I have a question coming in from Jasper's online. Do customers of Solaris have their own legal bank instance, or are all part of the same legal bank?
Yeah, so they're all part of Solarisbank, so they all fall under our license. Of course, technically they are segregated, so you would only, of course, see your own customer base and can make business analytics on that. But we all would have them sitting on our core banking system and on our balance sheet, which allows us also to move around funds much more efficiently. So if you have a couple different companies that are interested in deposit business in accounts and cards, then we could, of course, use that money on the credit side. So it's not a one-to-one connection that you need to have accounts before you can do credits, but you can do either accounts or credits. And that's why we decided to put everything under the same balance sheet.
Any other questions?
Thanks for your very interesting presentation. Banking systems become slow and complex, usually because over time there are many products, many specific use cases that are implemented in banking systems. How do you deal with the complexity problem?
Yeah. So the first couple of years, we decided to take a core banking system from the German market simply because it was enabling us to move quicker and for the BaFin to understand, okay, they're trying to do the normal things. But we realized that they couldn't keep up with the requests and the features and the demand that we had for our systems. So we decided 3 years ago to build our own core banking system, which funnily enough was called Project Corona. So that's a whole different story. And earlier this year, we completely migrated away with zero downtime to our own core banking system because it allows us to be much more flexible and indeed to hopefully take out some complexity. And we have modularized this in parts where we have said, okay, we take, for example, the reporting engine from somewhere, we have the ledger that we build ourselves, we have text components that we plugged in, which also allows us to plug it out for another market and plug it in a new or a local provider. So hopefully this modularity is the right bet. So far, we've been very happy with it, and we see an increase, a much deeper or much better increase in stability and in the quickness with which we can release features onto production. So for now, our core banking system is actually an asset and not a factor slowing us down.
Any other questions? I have one last question. I'm just curious about how you build your roadmap. Do you basically go by and build some kind of a generic offering and then you approach your customers, or you have the core banking and then you have a customer and you define what is the next product, feature, market, et cetera, et cetera?
Yeah, so in the first 3 years, we really had to build, let's say, the basics, right? To really make sure we were at least able to compete with the other propositions in the market, which we of course reached after 3 years. And now we are looking much more at what are the next things. So we categorized it into revenue generating features, into automating features, and into regulatory features. So, and then the question for us becomes, if a partner is asking for feature X, we will do an analysis on how much can we resell this and what additional value can this bring to us. So it's very unlikely for us to build a feature specifically for one company only, unless the business case allows us to do so. But normally we would look at how would this benefit the broader ecosystem around Solarisbank. Yes.
Any final question? All right. Then Rins, thank you very much for your time and for being with us.
Very good. Thank you.